측에서 공정한 제안을 내놓고 올바른 협상 자세와 문제 해결로 피랑을 위하여 많은 노력을 기울인 데 대하여 상대 측에서는 미 합중국 국무장관 마이크 폼페이오, 미 합중국 대통령 국가안전 담당 보좌관 존 볼튼, 경의하는 최고領導者 동지께서는 미 합중국 간보들은 경의하는 최고領導者 동지의 역사적인 첫 vien남방 경의하는 최고領導者 동지께서 타신 선영 열차는 조선인민에 대한 형제적 vien남 인민의 친선 단결의 정을 싣고 동당역을 출발했습니다.
Away out west where the wind blows free, a gambling man told a tale to me. Said you never can win on the turn of a card, 'cause with cards in hand, he's in command. He can make 'em jump to beat the band. Said you never can win on the turn of a card. Now a lot of folks are out to gamble just the same, getting into trouble playing someone else's game. And the phonies are always looking around, waiting to take this kind, 'cause they never can win on the turn of a wheel. This gambling man showed a game to me with 3 walnut shells and a little old pea, but I never could win on that little old pea. You peep-picking folks who hear this song, remember, and you can't go wrong, that you never can win on that little old pea. You see, in the shell game, that old pea can seem to be under all 3 shells, but it's an illusion. It really isn't under any of the shells. Now let's open up another can of peas and look at one that also gives the illusion of fitting under 3 shells at once.
It's time to talk about the stock market. My name is Mike Swanson and I run the website wallstreetwindow.com. I haven't done a video like this since around New Year's, but now there's some interesting developments in the financial markets that I want to draw your attention to, and some interesting things that are actually starting to happen. Last year, in the 4th quarter, I started to warn people that the market action that they were seeing as the stock market was dropping represented a cycle shift in the financial markets and in the economy, that we were actually approaching the end of the economic expansion, and this was going to cause all kinds of changes and movements and so forth, beyond just simply the stock market. In the day after Christmas, the stock market began to rally, went up sharply in January and February, and most people pretty much just went back to sleep. But they did more than that. They actually made changes in their investment accounts, which are quite remarkable and really worth bringing to your attention. The data shows that most American investors have been net sellers of individual stocks so far this year. This is a screenshot of the Zacks.com website, but they're also citing in the third paragraph encircled, data from Bank of America and Merrill Lynch that was reported about on CNBC, and I have access to the Ameritrade index, which also shows similar information here. But what happened was, individual investors, American investors, were net sellers of individual stocks, but they were net buyers of stock market funds and exchange traded funds. Bought more of them than they sold in their individual stocks. It means they weren't giving up on the U.S. stock market at all, but that they were disgusted with many of the individual stocks that they were owning and the way that they were behaving. What happened is that the most widely owned and popular stocks to buy in the past few years, they simply dumped, collapsed, some of them, last fall when the stock market was dropping. They fell more than the stock market did. And then when New Year's came, they didn't go up as much as the stock market either. They lagged. They failed to bounce. There were broken stocks. Stocks such as Apple, Facebook, Nvidia, Google, Amazon, and so forth. Stocks that we were told for the past several years we had to buy because they always will go up. They'll always beat the market. They're new technology. They were the market leaders that everyone had to buy, everyone was chasing, but then they dumped worse than the market on the decline last year, and then they lagged the market on the upside, which was something that I was saying was going to happen before New Year's. People held on to these stocks last year. They got hit hard, and then they saw the stock market go up, and the effect of that was their account balances did not go up in value as much as it would have if they weren't in those stocks and they were in just the S&P 500. So as a result, the data shows that a lot of people started selling the individual stocks they own, and they moved that money into the exchange traded funds. Apparently they came to the conclusion that owning individual stocks is what's holding them back, and the only thing they could do to bet is buy these ETFs and gamble that they'll go up from now on forever. Here's the money flows into the ETFs for the month of February. You can see SPY is at the top, and then the total Vanguard bond fund, the biggest bond fund in the world by market cap, was second. Real estate fund is on the list. Emerging markets is on the list. Emerging markets dropped bad last year, but in January, February, the emerging markets went up more than the U.S. stock market, so people decided to chase that action. Some people bought the iShares total U.S. stock market ETF. They just said, well, I'm not going to even try to pick out which ETF is the best. I'll just buy this one that's supposed to own them all. Well, I believe that this move into exchange traded funds like this that people have been doing is actually a mistake. People were right to sell the broken stocks that they own and try to do something different. But the people just throwing their money at these funds, I believe, are playing a shell game without really even knowing how the game works. Everyone knows you can't beat the market by holding on to lagging stocks. And people don't like it when stocks such as Apple and Nvidia break down and they hold them. They should have asked, what does this mean? Has this ever happened before? What it means is it's confirmation that we are undergoing the process of a cycle shift that I was talking about in the fourth quarter last year that is going to impact these markets going forward for the next 3 to 5 years. Consider this. Just last week, the European Central Bank reversed course on its monetary policy and launched a new QE-style program for European banks. Here we go, all over again. A year ago, the Federal Reserve was talking about raising interest rates. In September, they made it sound like they're going to be even aggressive about it. Now they're saying they can't raise rates anymore. A year ago, the Federal Reserve was talking about paring back its own QE bond buying program and letting the bonds that it bought with it just expire and run off its balance sheet for the course of the next several years. Now, they're expected to stop doing that before the year's over. A year ago, the Federal Reserve was predicting endless economic growth. Now the economy is slowing, the stock market is faltered, and they're scared, and they're changing their monetary policies accordingly. We have seen this game before. In 2006, Ben Bernanke said, I can't raise rates anymore. And then he said, don't worry about it. And what happened? In 2008, the stock market crashed. In the year 2000, the stock market fell 20% in April, and then bounced back in the summer, rolled over in September, and by the end of the year, Alan Greenspan had reversed all his monetary policies going into that year and began to lower interest rates. Giant shifts in monetary policy are indications of changes in the economy to come that will impact the stock market too in time. In 2000, the impact was apparent within the space of a couple months. In 2006, it really took a year and a half, but it did come. But that doesn't mean you should be scared at all. What you need is clear, concise thinking. Something that's missing, though, among the stock market masses that simply chase market action, something that's missing from the TV set in which the people on there are in a position where they have to deliver bullish talk and constant stock picks for the audience because that's what the audience demands. They don't want the clear thinking. But I'm going to give you or help you have clarity. So when people say bull market, it's a buzz phrase too often. And same with bear market, it's a fear phrase too often. People think bull market, okay, I'll buy that and it's just going to go up for years. And then they hear bear market and they think, oh, crash, I'm scared. And some people use those words to try to scare people. Bear market, oh, it's scary. Bull market, I'm supposed to be greedy. When just being emotional and using words in an emotional manner does not help you. And it's not how you should think about the markets. What you need is clear definitions. So a bull market is one defined simple. It's one that the market's going up, but the 150 and the 200-day moving averages act as consistent price support. And the market, or a stock for that matter, won't go below those moving averages and stay below for more than just a couple weeks. So since 2009 up until this fall, in fact, that's what happened. The stock market went up for years and never went below the 150-day or 200-day moving averages more than just a couple weeks at a time. And that changed, though. Last fall, it went below them for 3 months. Actually longer than that because it didn't get back above them to February. So 1, 2, 3, 4 months there. And in bear markets, that's what happens. The market will go below those moving averages, and then those moving averages will act as consistent price resistance. So you can get rallies back up to them or even briefly above them that just stall out. And I believe that's what we're facing, and I think that's going to be the trend now for the next couple of years. That's what happened in the last 2 bear markets, the U.S. stock market, but it's also what happens historically with any markets. What happened with gold from 2012 up until 2016. It's what's happened just with oil in 2014. It just happened. It's how markets work. But the good news, though, there are sectors that go up and lead at the start of a new bull market. They do it almost every single time. And there's also sectors that lead at the end of one and then keep going up in a bear market. But historically, the winning sector, the sector that everyone gets into during the bull market and leads at the end, when it falters and breaks down and starts to lag, that's a sign that the bull market's over. But that's okay, because if you can just focus on the defensive sectors that come to life historically when the cycle shifts, then you can continue to make money even if the stock market averages end up faltering. And this is exactly what is starting to happen. Since October the 1st, the top performing sectors in the market have been gold, utilities, and REITs. These are all defensive sectors. These are all sectors that, in fact, came alive in the fall of 2000 and then went up from then on, even though the stock market did so bad for the next couple of years. In fact, in the summer of 2000, the most popular stock to own was Cisco. Cisco had been a massive bull market leader in the 1990s. It became, I think, the number one company in the world in terms of market cap. in the year 2000, and then it topped, and it broke, and it lagged the market averages from then on for the next decade. Even when the market bottomed out and went into a new bull market in 2003, Cisco continued to lag. However, in the year 2000, by the end of that year, gold bottomed out and began a bull market that lasted from then on. Basically, gold outperformed the stock market up until the summer of 2008, and even when the stock market had the 2003 to 2007 bull market, gold continued to outperform. So but it wasn't the only thing. Stocks such as Philip Morris did terrible in the 1990s. These are defensive stocks, tobacco stocks, pay big dividends, but it bottomed out in April, just as the stock market had a big correction, and outperformed the Dow and the NASDAQ. Philip Morris did from then on. So cycle shifts, such as that occurred then, occurred in 2007, occurring now, create new leaders that can make you money. So bear markets are not something to be scared of, but something to understand. It's something to use, to get into new winners, to get into new things, to get out of lagging situations such as Apple and these fad stocks that so many people are getting out of, and move into something new. Gold has been going up since October and is beating the market, yet the masses are ignoring it. They aren't buying gold ETFs. Another thing that happens in bear markets is that you get big declines and then big rallies in which the bulk of the gains come in just a few weeks. Then the market typically stalls out and drifts, doing nothing for a while to form a top before it rolls over and begins another big decline. This is exactly what is now starting to happen. The S&P 500 and other averages rallied up to their 200-day moving averages, and then the momentum that carried them up so quickly simply stalled out. That doesn't mean I think we're going to see the stock market start right now to go straight down like it did in December. Not just yet. I'm hopeful we'll see a bounce before the month is over, probably from a little bit lower level from here. But what this does mean is that people just throwing their money into the S&P 500 ETF after giving up on Apple and all these other broken stocks and the other stock market ETFs are really making a big mistake. They're right to realize things are changing, so they had to make changes. But they need a game plan that matches with a changing stock market cycle. Just throwing their money at SPY and the other Vanguard funds is going to get them into trouble when the stock market rallies, when the stock market turns back down again and has a real decline. But the crazy thing is that in some ways, the next few years can bring huge opportunities for them. Because big winners emerge. And there's more to the market than just owning the U.S. stock market and owning U.S. bond funds. There's much more to it than that. You have commodities, you have gold, you have other markets around the world. So for example, in 2001, the Russian stock market started a bull market that lasted for years. It actually outperformed the U.S. stock market and did very well, even though by then the U.S. stock market was completely broken and continued to be bad for the next 2 years. So you just have to be on top of changes. You have to have your eyes open, and this is a time in which simply, doing work pays off. Put it that way. The past couple of years, yeah, you could buy Apple and Facebook. You could turn on CNBC and hear some picks screamed at you that everyone else is buying. Buy them yourself. Believe they're going to go up, and they would go up until this fall. But the problem is that same mentality, belief system, people are still holding when it comes to the ETFs. They believe, if I just believe in SPY, it'll go up. I can just gamble on that. It'll go up. And I don't think it's going to go up much more from where it is here. The risks are now to the downside. It's just the way it is. It's not to scare you, it's to wake you up and to tell you that there's opportunities out there. It doesn't mean your choice is not, I got to be 100% invested in SPY or cash, and there's no other choice. There's lots of choices, and you just need a clear definition of what markets are, how they work. What is a bull market? What's a bear market? How can you identify changes in sectors? How can you tell what sectors hold up when the market declines and become future leaders? How much money should you put into something? How should you manage your money? Integrate all this together. And I put something together to help you do that. I've been planning for this moment and for the next couple of years. The Bear Market Power Pack. Go type in bearmarketpowerpack.com and you get my entire game plan, 7 modules of videos that will show you how to navigate this market situation going forward and beat the markets, because that's my goal. And if you grab that, you can also get a 30-day trial to my private Power Investor group. Not this weekend, but the weekend before last, I told them I was expecting the stock market rally to exhaust itself in March. It did indeed happen last week. But I also send them trading alerts. And in the middle of last week, I told them that I was shorting a couple stocks and selling a couple things that I'd bought for small losses. Because it's very important to sell at times like this too. And even if it means selling for losses. People don't like to talk about their losses. They never talk about their losses on the television box. Most gurus, so-called, never will talk about their losses. But I said, I'm selling for a loss. Why am I selling for a loss? Because in September, it doesn't mean I sold everything I own and everything is at a loss. It's not. But I had some stuff that I had to get rid of. Stop losses. And the same thing actually happened to me in September. There are some positions that I had that turned down, and I sold. And I said, I'm going defensive here. This is a big warning sign that things are going to get risky. And they did indeed. And I can't show you the specifics, but it was a big warning sign last week on some of the things that took place in the markets. And I took some money off the table and stuff that I had some small losses on. I share that with you to say that consider doing the same. Consider doing the same. As the data shows, many people have sold individual stocks, many people have not. It doesn't mean sell all individual stocks. I own lots of individual stocks, but I own individual stocks in sectors beating the market. But I don't own the Apples. I don't own the Facebooks and this stuff that is broken and lagging. If you do, you might want to get out. You might want to get out of that and grab and getting out of this bad stuff. It also enables you to sit back and take a break and use that break to learn and develop a game plan and a system to navigate the markets in the next couple of years. And grabbing my Bear Market Power Pack at bearmarketpowerpack.com can help you do just that. So it's been a very interesting year. It's been interesting to see how the masses are moving their money around so far. It's also been interesting to see the market action itself. And we're going to have all kinds of interesting developments going forward. So that said, have a good day. Go to Bear Market Power Pack and check it out. And I'll be talking with you later.